welcome to MIDCAP Multibaggers, a CNBC TV18 special. I am Reema Tendulkar. With me is Nigel D'Souza. Midcaps are buzzing and everyone is in a rush to catch the tail of a winning bull. Midcaps are often overlooked by large investors and FIs, often considered to be a little more risky and prone to a lot more volatility than their large cap peers. But that's where the big money has been made. In fact, since your 2008 lows, the midcap index has gained close to about 380% versus Nifty gains of only 270%. That's the kind of outperformance. This is the show where we're going to identify a lot of hidden gems for you, already at record levels for the midcap index. But what lies ahead?
Well, thanks, Reema, for that. Yes, this is the show where we get you not one, not two, but 16 mid-cap multi-bagger ideas. So fasten your seatbelts. Joining us on the show today, we have our MARKETWALLAHs, Mr. S.P. TULSIAN. We have Mr. PRAKASH DIWAN with us. Also, we do have AMBAREEsh BALIGA, as well as DEVEN CHOKSEY. Hi, gentlemen. Thanks so much for joining in. And let's start off the show with Prakash. Prakash has got his first pick for us. Prakash, take it away.
Well, thanks, Nigel. Thanks, Reema. Worrisome times actually for picking mid-caps because when you have these elevated levels, it's always very scary to get into the temptation of buying momentum. But what we tried doing is identify stocks that not only have decent quarterly earnings turnout, but also continue that positive momentum. The first is from my favorite space of auto ancillaries. Okay. The company, well-known name called PRAKASH. Not a very new name, but it's come back with a bounce of sorts. I believe the company has gone through a major paradigm shift because it's one of the largest, in fact, it's the second global largest player in instrumentation clusters. You know, in simple terms, meters that they make, which you have on all your two-wheelers and four-wheelers. Now, this company realized that the industry is moving towards from the analog to the digital side and had to re-transform itself completely into a new product line. So they've diversified themselves into much more stable products and much more applications. The restructuring exercise is more or less complete. Last quarter, they turned profitable, which is a very good indication. The management is extremely confident of being able to clock at least 20-25% growth for the next few years in top line. The EBITDA margins are anywhere between 15 and 18%, which is quite healthy for a turnaround case. My best case scenario in this particular company is that the kind of demand that we expect from two-wheelers and four-wheelers and CVs, all of it will benefit because this company is completely into all these verticals. It's not just selectively into one or two of these, but it's across all segments of the automobile space. So look at this company. It is going to surprise us for the way the management has indicated on your channel some time back about inorganic growth. And it's a virtually debt-free company, just a 0.2 debt-equity ratio. That gives them enough muscle to buy into companies, especially across global markets, especially when Europe and all are turning soft. It's the Indian players who are going out shopping, and I wouldn't be surprised if they announce some major announcements which will kind of help the top line growth. They've got an ambitious target of 3,000 crores by 2020, and I hope investors take that benefit. Give it a target of about 200 from here, and then that makes for a multi-bagger.
Well, you said you're scared of investing in momentum stocks, but this one has seen such momentum. Pre-call has rallied 150% in the last 1 year, and your target price at 200 rupees means that there is another 150% upside left in this.
No, absolutely. I think it's the financials that give you that confidence. You know, I wouldn't be surprised if they actually end up notching an EPS upwards of 7 rupees. And from there on, the kind of growth in top line will also kind of back the justification of this huge expectation.
Okay, clearly auto ancillary seems to be a hot sector because the next one, the next recommendation for you is also from the auto ancillary space, SML Isuzu by Mr. Tulsian.
Reema, SML Isuzu, in fact, is a automobile space, and if you see, they make the school buses, four-wheelers, commercial vehicle, and if you go by the first quarter sales numbers, the company has posted highest ever sales of 4,900 vehicles against 3,800 vehicles which they have posted in the Q1 of the last year. Because Q1 sales numbers of the company are always best because of the school buses. If you see the major school buses and the mid-size commercial vehicle, you will find SML Isuzu as the vehicle used by all the users. So growth of 28% in the sales, and as I've said, that 4,900 vehicle sales per in the quarter is highest ever, which has been posted by the company. Now that will definitely be getting translated into the better working. I am expecting that Q1 numbers will be having an income of closer to about 445 crores, EBITDA of 54 crores and PAT of 32 crores. That will translate into an EPS of closer to about 22 rupees. And mind it, FY16 had an EPS of 35 rupees. And when the last quarter, last year, Q1 of FY16, when they posted again this best number, the share touched a high of 1600 rupees, which is again its highest ever. And if you now see, the share is ruling below, way below its highest ever of 1600, now at about 1130, 1135. And if you go by it's a debt-free company. Sumitomo of Japan is holding 44% and Nissan is Isuzu Motor is holding 15% as a non-promoter. So 60% of the stake is held by two Japanese giant. And going forward, the company is implementing a capex of about 300 crores, which will add the product innovation and technology improvement. And once that happens, they probably will be, because mind it, their capacity is of 18,000 vehicles per annum. And 4,900 sales in one quarter has been translating into a capacity utilization of closer to about 110, 115%. So taking all this into consideration, I think that SML Isuzu will be able to surpass highest ever its target of 1,600. But for next couple of months, I am giving a price target of 1,335.
All right, thanks so much for that, Mr. Tulsian. But if you're going to make a lot of money in this earnings season, then you may have to go for a holiday. So let's get an Ambarish. I think his next pick is focused on that. Ambarish, tell us.
Yeah, in fact, my pick is in that same space, basically, holidays, and it's called Cox & Kings. Clearly, I think more and more people are taking holidays nowadays. And Cox & Kings got into that big league after taking over holiday break. This was about 4 years back. And with this, their gross debt moved up, and which is currently about 4,000 crores. And that is what was keeping pressure on that stock for a while. And what they've done in the past couple of years is they've started liquidating those investments which are not really giving them that high ROCE. So they're just concentrating on those businesses now, which are giving them extremely good returns. And over the next, 4 years, clearly they would be able to reduce this debt to possibly about 1,500, 2,000 crores. So from that point of view, and looking at the way the spend has been increasing, and especially now you'll have a lot of people also possibly going to UK because that's become much cheaper. In fact, by FY18, I'm seeing an EPS of about 24 rupees for this. And looking at that, it's about 8 times, which looks decently cheap. So in fact, I have a price target of about 270, 280 for the stock over the next 12 months. But again, a word of caution, because the markets have already moved up decently well. So don't go out and buy tomorrow morning. Possibly wait for some small correction and pick it up at that point of time. And anyways, most of the stocks which I've been recommending don't move up fast. They give you enough time to pick up.
Yes, we remember your rallies recommendation, Ambarish, which you gave us in around the Christmas time.
Yes.
And what a stellar run that's had.
Yeah, but then at the same time, it remained at those levels for about 1.5, 2 months, and then started moving up.
Okay, so Cox & Kings 270 could be the potential target on that. Who can say no to spending on travel as well as education? But we can't stop talking about monsoon. And the next recommendation is by Deven on a possible monsoon beneficiary. Deven?
Hi, Nima. Well, I believe that I think the agri space is going to command higher amount of attention and the premium also in the marketplace, largely because of we are going to see a quantum jump coming into both the crop protection business as well as the agri seed business. And that's where I think we believe that I think the stock like UPL could possibly be a better choice going forward. Typical to this particular company, what I find here is that on a revenue growth of around 15% to 20%, they could be probably moving faster onto the margin growth because of I think few things. On one side, I think they have got the focus of molecules which are basically off-patented and they are becoming generic, so they are supplying to the patent holder these particular molecules, and in turn I think they command higher volume and the margin from this particular business. Second thing, the revolutionary products that the company has started launching. In fact, I think one of the product which they recently launched, which is yet to bring the revenue and the profits, but I think has a huge potential, is a product called Ziba, which has got a property of retaining the water, and I think it is going to change the way in which the cultivations would take place going forward in various parts of the world. So this is one company which looks highly strong as far as the opportunity goes. I'm not suggesting that this is a 1 week story or 1 month story or something like that, but those investors who are looking at the business, for at least 2 to 5 years from now, they would probably stand to get maximum amount of benefit out of the investment in this company. Every fall or correction in the market would be a good buy opportunity in UPL.
All right, Deven, thanks so much for that one. I remember the stock at around maybe around 130, 140 just a few years ago. But Deven is saying that maybe, in fact, it can even go better. So just watch out for that stock. But we have given you only 25% of the recommendations today. So let's slip into a short break. You come back. The remainder of the 75% are waiting for you on the other side. Stay tuned.